All right, legends, we are live. How's everybody doing? We're going to be analyzing the price of Bitcoin because, yes, it is the moment of truth for the price of Bitcoin to maintain here this range as support. Could we test again $86,000, $85,000 in the next coming hours? Will we get one more low? Are we going to break down the support? That is the question. I know exactly what I'm looking for here, and this is what I want to share with you guys, okay? So I need you to pay full attention here on this stream, especially if you are a trader, because what I am looking for the next big trading decision, of course, I'm going to share on this live stream. We need to analyze the waves, analyze the structure of the market. Is this a great opportunity zone, or are we going to break down $85,000 and go to much lower levels? Now, this is a crucial level of support. I did explain this on yesterday's live stream. We do not want to lose this area. And the main reason why is because we do not have much support below $85,000, meaning that we could drop to $80,000, $75,000, even as low as $70K. And the main reason why is because the price action that we had in November blasted off here, okay? This means one thing. We haven't left any good, strong volume nodes in this area. No big support zones in this zone in between $75,000 and $85,000. So it's extremely important that we do hold on here. Hey, but maybe this has already been the low. I would like to know in the comment section if you are feeling more bullish or bearish. Is the low in, or are we going lower, guys? Let me know. I'm going to ask this on a poll right away as we do get those likes smashing up here, and we're going to go through the Bitcoin technical analysis, okay? Smash up the like buttons, guys. Let's see how many likes we can get on this stream, okay? Absolutely destroy it. We can get at least to 100 likes, guys, in the next coming seconds. I'm not sure how many likes we do have right now. I need to refresh this, but let's go, guys. I've got a good one for you here today, so make sure to stay tuned. All right, it's importante, muy importante. First of all, let's go through what we talked about yesterday, right? A little bit of the range, a little bit of the scenarios that could happen locally. I don't know if the price is going to break up, if it's going to break down from the current price levels that we had, but a possibility of coming down to test the lows below $87,000 was a scenario yesterday, looking for an ABC flat. So we came down to the lows, we tested the lows, and we bounced back up to $89,000, right? This is what happened. So are we forming a larger fourth wave? And we are going to create one more low. We are going to be analyzing very carefully, as we do always, guys, to try and predict what could be the highest probability movement and where we have trading opportunities. We are traders. We look to scratch dollars from the market. We're scratching dollars from the market on high probability trading setups, okay? No irresponsible trading taken here. We go through the levels, we go through the scenarios that could happen, and you, as a trader, obviously, no financial advice, you take action on maybe stuff that I'm talking about. You know, you mix it with your analysis. It's all really up to you at the end of the day. Let's go quickly through the comment section, and we'll go through ever so slightly higher time frame on Bitcoin, and then we'll be zooming in on, most importantly, the latest move that we had in the last few days. Is it strongly impulsive? Do we have one more low to be created? There is definitely an option. Or is this just extremely impulsive to the downside? When we take a look at the movement down from all-time high, right? If we want to count this as some kind of impulsive move, we need to go with the double 1-2s. There's no other option. This did not move down from $110,000 down to $86,000 yesterday in a very impulsive way. What does this mean? There's low volume. There's a bit of volume down here, but this is actually good for the bulls. Why? Because in a ABC or a WXY, you finish your C wave with the highest amount of volume. More volume than the A wave, more than the B wave, of course, because it is corrective. So could this be a three-wave structure? And this is what we're leaning on, guys. We are leaning on the possibility that this right over here has been a three-wave structure and is not impulsive. We know it's not impulsive for the moment in a 5-wave move. So the only possible future impulsive move down would be multiple 1-2s, which does not look highly probable, and it will be explained throughout the stream. It's all about probabilities. It's not about guessing. It's realizing what is more probable that could happen, right? What is the highest probability? That is what we try and map when we analyze the charts. And I can tell you that this being a multiple 1-2 scenario where we are building up the third wave, this would be a triple 1-2. 1-2, 1-2, and then another 1-2 right over here. We're building up the third wave to then form 4-5s, 4-5s, go to much lower levels, right? Why is this the lowest probability, right? No matter how emotional you are, no matter how, how you believe, right? If you're bearish, you have that bearish sentiment inside of you, or you have that emotional bullish, this is the low. It doesn't matter. It's all on the charts, and the charts tell us what is highly likely going to happen. And what is highly likely going to happen is that we do not break down successfully from $85,000. That is the highest probability scenario. Can it break down? Absolutely yes. We cannot say it's the low and we cannot break down from $85,000 because that would be foolish. I don't know. I know it's highly likely that it won't happen. Okay. And it's highly likely that we could be getting a recovery from this area. Now, as technical analysts on the lower time frame, we need to figure out, is the low in here? Or could we form one more low, right? That is what we always try to map, okay? We can never be extremely sure of something happening on the price. Never. You can be more confident as price develops, but you're never exactly 100% sure. Your percentage of probability, all right, of confidence can go high as the information follow throughs. Okay, and that's what we are going to try and explain here on this live stream. So first of all, for the bears, we might get a little bit of bearish, let's get some very bearish, low probability scenarios just to hype up the bears out there, right? People that have sold all their bags, they are out of crypto. It has to be in the last 2 weeks, even the last week, I would say, lots of comments throughout YouTube, throughout X, saying, I have had it with crypto. I have sold everything. I don't trust it. I've had enough. Just a couple of months ago in November, when we had the nice pump coming to all-time high on Bitcoin, coming to $100,000, we got some altcoins pumping 3, 4, 5x. People excited. People calling for much higher levels, calling that, we are in the bull market, right? 2025 will be epic. This is the moment right now in the last week that we've had the worst sentiment ever. Lots of comments saying, I'm out of crypto. I'm fully out. I've had it, right? I'm getting out. I've had enough. Which is a very, very bad sentiment, of course, right? When people are very, very bullish, like in November, the market pretty much goes flat and even goes to the downside. What now? If we are at the lows of the range and we get this extreme bearishness, and you can see it throughout social media, you can see it here on the fear and greed index, for example, right? Extreme fear, guys. People have had enough, right? Especially the ones that have been speculating very aggressively on altcoins and putting full faith on major projects, right? Altcoin projects. The ones that are holding most Bitcoin are fine, right? Such as myself, I got a large stack of Bitcoin. It has only dumped, 15% from all-time high. We can handle that situation. People that have been putting full faith on altcoins are really feeling the pain. This is why we should never go all in on altcoins, okay? No matter how bullish you are on a project, like myself on Chainlink. I've got a large stack of Chainlink, but it's still doing pretty well. I understood where I had to buy, so I'm good. Okay, I've been in here in the crypto space for many years, and my average buying zone for Chainlink has been $6, $7. So it's at $14, $15 today. It's totally fine for me. I'm still in gains. The people that have entered late throughout the last few months on altcoins are really you know, taking that pain very, very aggressively, right? So we are Bitcoin traders. We need to analyze what Bitcoin is doing. If Bitcoin enters a bear market, right, then altcoins have already entered a bear market. It looks like it throughout the last few months. So Bitcoin needs to hold. Bitcoin needs to hold and, you know, go to the upside so we can, you know, expect that those altcoins recovering, all right? We're going to focus on Bitcoin, guys. Bitcoin is the number one. Bitcoin's the one that is telling the story of the cryptocurrency cycle. And we need to understand Bitcoin. If you don't understand Bitcoin, you will not understand the rest of the cryptocurrencies, no matter how bullish is that project. Bitcoin is the number one. And on top of Bitcoin, eventually, we have stock market, right? If stock market gets a crash, if we do see a recession, then Bitcoin, at least in this cycle, will not handle that pressure and will eventually take the hit to the downside on any type of recession or black swan event, right? Bitcoin is not ready to be the world reserve currency just yet. It might be in the future, but not yet, okay? So any black swan event, any world economic recession, Bitcoin will take that hit, right? Let's analyze before we're going to go to the comment section, as we do get a lot of people joining the stream, okay? Don't worry, we'll get to the lower time frames, guys, and we're going to analyze very specific levels, okay? For those intraday, even swing trade scenarios to try and trade safely and have good risk management, okay? It's all going to be explained a little bit in detail throughout the next 20, 30 minutes. We're getting the warm up. We're getting people joining. I'm just going to say hello to the community, of course. How's everybody doing? Ondo, please. Yeah, we can take a look at Ondo later on, all right? I know Ondo, big project, BlackRock behind it, real world asset, fantastic. Bitcoin, if Bitcoin takes a hit of 10%, Ondo will take a hit of 20%, and so on, right? It's just how this market works. So we'll be taking a look at some later on, guys. Flux, Theta, Say, we can take a look at altcoins later on, guys. We are Bitcoin traders. We look to scratch some dollars off Bitcoin trading, right? Safely. 80K, 90K, I'm buying, says Moses. Not a bad range, especially if this does turn out to be that reaccumulation, right? So far, we have tested the lows. You know, when we test a low of a range, you know what usually happens on the most bearish case scenario? You get an explosive breakdown, and you want to have that breakdown the first or second day. So if we didn't break down very aggressively yesterday to 80,000, to 75,000, and we are not going to break down today, the more time we range below the low of the range, the higher probability we will see the recovery in the next coming days. It's just how it works. The bears need to push down today, tomorrow, very aggressively if they want a successful breakdown. Because you know what happens down here? Smart money buys. Smart money buys. Reaccumulation happens. So they need to break down. They need to break down today, tomorrow. Most bearish case scenario, they have to do it very soon. Because if we start getting above the lows and closing daily candles, I can tell you that this will increase in probabilities. Okay, so the bears need to take action if they want to push the price below $85,000 throughout today, which I think they'll very likely have a chance. And that has to do with the explanation from yesterday. I do think that there is a high chance that the lows from yesterday could be tested. All the bulls out there, such as myself, looking at this scenario, we are going to have our patience tested, right? The moment the price, right, if it does come down to the lows, will be a moment of, okay, this would be the extreme panic moment and ultimate decision for the bulls to step in if we were to roll down to the lows. There is a technical analysis reason here that this could end up being bullish, right? The last little shakeout. If you were here when price hit all-time high, this is a very bullish moment, right? Bitcoin to 120, 130, right? This is it. We're going to break out, right? You get very, very bullish sentiment here. And here, the opposite. You get very, very bearish sentiment, right? So we'll be going right away through the lower time frames. After going through the higher time frames, let's quickly say hello, okay? We're going to take a look at some altcoins later on, guys, all right? Not now at the beginning of the stream, maybe after an hour or so. We focus on Bitcoin trading and what Bitcoin can do on the technical analysis. How many likes, says Aditya? My man, much love to you. I mean, this was from yesterday's stream. Let's go to today's one. BTC is a meme coin, says Peter. Far away from it. Orlandi, Jackie Wood, I got my mother here giving support as always, one of my first followers. I think the market waits to see earning shares. Very possible. Not too much news throughout this week. We do have tomorrow, durable goods, GDP growth rate. Tomorrow can be interesting. We might see a little bit of volatility kicking in after the major drop that we had, of course, the last 2 days. So, right, BTC is like my wife. One day okay, one day in hell. Stinky butt. Very true, very true. Ox the Doctor, how are you doing? Andy Real TA, absolute legend. Pain, my man, much love to you. Max is upset. BTC is a meme. Yeah, also, BTC is doing quite well, okay? I mean, if you were here a few years ago, Bitcoin just 2.5 years ago was trading at $20,000. So it's done pretty okay. It's done pretty okay. All right, legends, let's dive in right away through the technical analysis. Now, yes, guys, okay? Hello to everybody. We've got 800 people watching the stream. We got the like button absolutely getting destroyed, I hope. Let's double check. I hope that we are at least above 200 likes. Almost at 200 likes. You guys are epic. Let's get to 200 likes right away, and we're going to focus on the pure technical analysis, guys. Why I do think that the lows could be tested again, and that will be a decision moment, okay? Let's get to 200 likes, and we're going to crack on with the technical analysis. For all of those bears out there, hit the like button, says Pain. I'm gonna leave this poll. Is the low in for Bitcoin? Yes. No. Much lower. No, but very close. Let me know, guys. We got a poll here with several options. And is the low in for Bitcoin? And I'm going to crack on. We got over 200 likes, and we're going to start off with a Bitcoin technical analysis, higher time frame, easy, basic explanation. All right. Check out here the poll. Right. Is the low in for Bitcoin? Yes. No. Much lower. No, but very close. What options do we have here, guys? Let's see what people are. Okay, we got no, but very close. That means that we could test 86, 85, right? 84 maybe. That would be painful. Some people say yes. No, much lower. We got 20%. Okay, so yeah, this is kind of the answer that I'm looking at as well. I think not, but we could be very close. It could be in, but I think we could be very close. There is a high probability technical reason that the low is likely going to be tested again. Okay, and we'll go through that on the lower time frames. All right, so make sure to stay tuned. Let's go right away through the bearish case scenario from all-time high, right? It's very important to understand not only this range, okay, understand how the price rejected from all-time high. How did we reject from all-time high? Did we reject impulsively? Did it start going sideways? You know, small little impulses, 3 waves, 5 waves, right? We need to kind of structure a little bit the movement down. So the first initial drop from all-time high was right over here, quite fast, right? And then we got a bounce, testing the lows, and another bounce. This is not impulsive. You need to consider this as a corrective structure because there's no big major breakdown. Okay, you don't form a wave 3. It's very sideways, test the lows, almost test the highs. This is a sideways range, so it is corrective, right? We need to come to that conclusion because the chart tells us it is not a 1, 2, 3. It's still corrective. Very important information that we do have with this range after the rejection of all-time high. So when we do take a look at this, okay, we got the first leg down, and then you have a bit of a running flat situation here, right? A bit of a flaggy moment, right? Sideways momentum. This is giving you another wave. You got a one wave down and a sideways move here in this correction. If we are considering the extreme bearish case scenario, this would be a wave 1. This is a wave 2. Why I don't like this as a wave 3 is because, you know, it's relatively short. You got a big major bounce overlapping your wave 1. Not good. The only thing you can come up with is kind of, yeah, not even that. You know, you know, there's no proper way here in coming to the conclusion of this being an expanding move or a contracting move. There's just not a way here in this area, right? So all of that is nonsense, right? I've already analyzed the situation here to count this as a wave 3, and it's not kind of possible. All right, not even an expanding, a contracting move. There's overlap here, so it's not impulsive. All right, so this is your only option. This is another 1, 2 right there. That's your only option. Another 1, 2. Your second other option here is another 1 and 2 right over here. Contracting move down in a 5-wave move. Okay. A flat scenario here. Another wave 2. So you've got 3 1, 2s. And that's the extreme bearish case. If you have 3 1, 2s building up for a big massive drop, and I'll tell you why this has low probability, it all has to do with timing and length. Usually you would want to see your second 1, 2 not being as powerful as your first 1, 2. Because this has to be a lower time frame 1, 2 to form a third wave. Okay, so eventually, preferably, you want your second 1, 2 being similar, okay, or slightly smaller than your first 1, 2. And this was much more aggressive. So that lowers the probability as well for this scenario. If this were to be a triple 1, 2, what you're building right now is a massive third wave down, right? If you have 3 1, 2s, then you're going to have a massive third wave down, and then you're going to have another 3 4 5s following through here. Eventually, the massive collapse down to below $80,000, $75,000, right? Now, it all has low probability based on the timing, based on the length of the second 1, 2, much more aggressive than the first 1, 2, okay? Lowering this probability. Now, if that were to be the case, we would expect a breakdown, okay, guys? I have to say it is possible, but based on timing and lengths of the waves, there is still low probability for this setup, okay? However, if this were to be true, that we are building multiple 1, 2s, then the breakdown is going to be pretty aggressive, right? You would expect that third wave formation, which we're just in the beginning stages, right? Halfway through that wave 3. I am not leaning on this scenario, but I understand that it is there, okay? There would be a valid count for this to be a triple 1, 2. And we'll just have to acknowledge that if that happens, well, this was the correct count, right? I'm not leaning on this scenario, especially as we have lost the lows of the range and the price is not breaking down aggressively. And it did actually get a nice little stop yesterday. We got a little bounce, and now we are still in this range. I do favor the price hitting the lows again, and I think it's very, very likely. So we're going to go through that right away, okay? Let's try and understand, okay, the bullish case. The bearish case is in between today and tomorrow. We start breaking down already, guys. And, you know, the third wave is the one with highest volume. We got multiple 1-2s, 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 3, 4, 5, 4, 5, bear market, guys. We're going down to 70K, right? 75, 70K, even below that, right? Very aggressively. Not leaning on that scenario just as yet. This still leans on the side of reaccumulation. The waves, the patterns, the similarity here on a Wyckoff accumulation, the volume is very low on the selling pressure since all-time high. This, of course, is in confluence with Elliott wave theory, with analyzing the waves and the timing and the volume. The highest probability scenario still is that all of this combined with this is corrective. It's a corrective range, just like this range right over here was corrective. So we never know with certainty that is this going to be the low, right? I'm leaning on that scenario. I need to understand that there is a possibility for that double, triple, 1-2 here, guys, and that third wave is on the formation. This is why we need to manage risk. All of those people that are looking for swing long positions to catch the low, be aware that the low can be taken one more time, and this is going to be explained on the lower time frames based on the latest impulsive move down that we've had since $99,000, right? Just a few days ago. We need to understand this movement. As we understand this movement, we can come with some possible scenarios in the next 1 to 2 days. And that's what we're going to do. So the bullish case scenario, we're going to keep it simple. All of this is corrective. Why is it corrective? Well, we got from this all-time high, as explained yesterday. Higher time frame is the same, guys. I don't like to go through it much because it's, just for any new subscribers. We got a 3-wave move down. This is not impulsive. It is corrective. Okay, but if this was corrective, then this was impulsive. This was the high. This was the 5th wave, right? Well, there's a problem with this movement up. It is looking very 3-wavy. This was a very, very straight move up. The only good harsh correction you had was this one, right over here. And then you had a quick straight leg up. This was the inauguration date, I think, from Donald Trump, right? So was the inauguration of Donald Trump the all-time high, right? Kind of sell the news, right? Donald Trump is in, new president, crypto's the future. This was the all-time high, at least for now, right? For the last few weeks. Just take into consideration how news and hype, all right, or massive bad news really reverses the chart, okay? When you take a look at the C19 crash, one of the most devastating events that we've had in the last decade, oh my goodness, this is so horrible. The future is not looking bright, guys. Stay safe. Everything's going to go down. My goodness, how horrible is this? Massive recession. The C19 crash in March of 2020 was the low. It was the best buying opportunity on almost any asset. Oil, gold, Bitcoin, meme coins, crypto, you name it. If you would have bought that massive fear, you eventually made some very, very good money. Of course, I did buy in. I was already in stock market and crypto throughout 2020. And I understand that, this is a good collapse. It's a good buying opportunity. On the inverse side, we got Donald Trump, first crypto president, inauguration, top. So do not buy based on the news, guys. Buy based on what the chart is telling you. And the chart here was telling you this was a swing failure pattern. This was a good level to short the market. It was a good level to sell some Bitcoin. You could sell some Bitcoin here on the rejection, and you could buy some here. If we break down, you can buy some here, right? The news is late to the party when you take a look at the charts. This is why charts come first, news comes later. It's simple, right? The sentiment here was the most extreme bullish that there's ever been in crypto. We got the president, first US president, Donald Trump, inauguration day. This needs to send Bitcoin to $500,000, right? Well, no, not now at least, right? Not now. This was a short-term sell the event, just with a simple double top on the chart. The sentiment here was bullish. The chart was a big rejection from all-time high. So chart is a bit bearish, I have to say. When I take a look at comment sections, and I take a look at media, and I take a look at friends sending me messages, DMs. Bro, I got out, I sold 50% of everything. I'm not too sure. If you see an opportunity, please tell me. And I'm like, holy crap, you know, we're probably very, very close to the low. We're probably very, very close to the low because, you know, people are chickening out, right? And people are at a loss. So as we do have that sentiment, inauguration, Donald Trump president, yes, crypto is the future, Bitcoin to $1 million. No, we come down. Oh my God, Bitcoin, this is it. We got the same sentiment, but very bearish. Very bullish, very bearish. Okay? This is why you need to take into consideration, holy moly, we're probably very close to the low, and this could be an epic spring point. This could be an epic spring point right over here. Just like we had an epic spring point right over here. This was an epic spring point right there. Boom, bang, bang, back test, off we go. It's different now. Yes, I know, it's different. There is really a situation here regarding being too bullish in this area, okay? And I need to talk about it on the higher time frame because I cannot be extremely bullish here. I am bullish based on looking for a swing trade. I'm defensive. I could be completely wrong. And the main reason I could be completely wrong here, guys, the micro count from this area to this area does suggest that we do have another leg to the upside, at least. Whether we break out successfully or not, then we can analyze that once we get there. But this scenario suggests that we're going to form a higher low here. However, there is a valid count that this was your wave 5 and this was the end, the inauguration of the president, right? And this is for this cycle. Bitcoin will go to $500,000 in the future, okay? We're talking about this cycle. There's no top for Bitcoin. Bitcoin's going to go up forever, right? But this is according to the cycle. There is a count that, you know, does tell me, right? From the low of the FTX collapse, right? One of the largest exchanges in the US that collapsed in November of 2022. That was the low, right? Massive fear. Oh my goodness. Lots of people losing money. Well, that's the moment where, you know, the smart money gets in eventually, right? And we create this massive bull run. So there is a possible count here of 5 waves. You know, this is what is worrying here right now, okay? Now we're really testing the possibility of the price managing to form another higher low. And that is just because we do have double 1-2 possible setup here in a 3-4-5, and then we're looking for another 4-5. This is what we are expecting. This is what we are leading on, that there is a chance that we could form that spring point, that reaccumulation. We'll go through the lower time frames, guys. The price is dropping ever so slightly now. Not too worried. So we need to analyze, you know, that there is a possibility here, okay, that the high of the cycle could be in, especially with the inauguration of Donald Trump, right? We just need to understand, based on the waves, that it is very possible. Inside of the third wave, in the middle, we did have the ETF launch, right? Which did create a local top, big rejection. And look at this. Just so you understand how the news and the sentiment works on the chart, guys. It's pretty insane. We're going to go through multiple scenarios. C19 crash, FTX collapse, the ETF launch, Donald Trump president. All the bullish news obviously brings a local top, right? January of this year, of 2024. First Bitcoin ETF launch. We dropped $10,000 in 2 weeks, right? In less than 2 weeks. We tested the highs, fake out, tested the lows of a multi-monthly range, right? December, January. Spring point from the lows of the range after a nice breakout. When you analyze this range and you take the lows of the range, this is why you do not want to break down successfully from this pivot, because you have a lot of inefficiency here. I mean, there wasn't that much. You would have got supported from this nice resistance right there. Big order block right there on the higher time frames. You move down, bit of volatility. You start trading for a few days here. This is bullish. This right over here is bullish. This is bullish. Yeah, you're saying that because that's already happened. Well, I want to make you understand that when you test the lows of the range and you start dancing around for a few days at the lows of the range, this will be bullish, guys. Okay, so I mean, like I said, there is a chance it breaking down today or tomorrow. But if we do start dancing around between today, tomorrow, we test the lows, we get a bounce from the lows of the range, and we start doing this on candlesticks, this right over here will be bullish. Just like it was down here at the range, right over here. Also here, you would arguably discuss, if you dance around at the lows of the range with no breakdown in a matter of 1, 2, 3 days max, you dance around, there is some serious reaccumulation going on in this area. So the next couple of days is going to give us a lot of information, guys, a lot of information. It either breaks down and we go to $75,000, or we dance around here at the mid 80s, 85, 84, 86. And then we look at the spring point possibly following through here in the next coming weeks, right? So that's going to be very, very interesting. It's going to be very, very interesting to see what happens in the next coming days, just considering the higher time frame, right? We're going to zoom in on lower time frame. I know a lot of people are here for lower time frame, guys. Lower time frame is where we do find the magic, the opportunities, right, on Bitcoin. And we're going to get there right now, guys. Don't worry about it, okay? I know there's a lot of people like, oh, you know, higher time frame, that's boring. You know, let's take a look at, can we please take a look at the lower time frame? Because I want to take a look at some good trading opportunities. We're going to go through that, guys, now in the next coming minutes, okay? Hang on a second. I just want to make you understand, you know, if the price starts breaking down very aggressively throughout the next coming weeks, we need to understand that we've had a bull run on Bitcoin, right? We've had a 5-wave impulsive move when we consider the waves and the sentiment, right? You got in the third wave, ETF, it's the future. We're going to absolutely moon. We're going to 200,000, 500,000. right? Forming that very explosive third wave, as explained on the chart, right? You got the big ETF event, right? And massive follow through. You got a lot of people joining throughout 2024 because of this, creating the bull run, right? We have formed 5 waves since the 2022 FTX collapse, okay? There is 5 waves that are counted very easily on the higher time frame. There's no, it has to be the most simple, easy 5-wave move that I've ever counted before, which is right over here. And the wave 1 was very easy as well. Very easy, very straightforward. You had from the low of the FTX collapse, 1, 2, 3, 4, and 5. And then you add your A, B, C flat. Testing highs, testing lows, spring point, bang. Very easy wave 1. Wave 3, of course, your most explosive. Very easy as well. Very 5-wavy, very easy to count. Now is where it's getting tricky here, where it's like, do we have one more wave up in this wave 5? That is the question. Do we have one more leg up? And if we were to break through very aggressively, then eventually you need to come to the conclusion that this was a 1-2, 1-2, and this, was possibly another 1-2. You just don't know. You're just going to have to build up the waves as you go through. I'm not leaning on we are going to go to $500,000 or not even $200,000, guys, this cycle. I'm even leaning on the possibility that the top could be in. But I'm leaning on the one more high is definitely possible to count that, finish of the wave 5. And it has to do with this movement up that we had from wave 4 to wave 5. You had a couple of 1-2s here, which are very interesting. That is giving you a chance to create one more high in a 4-5, 4-5. So there is a chance, okay? We ain't gonna go down that rabbit hole, okay? I'm just saying it's possible. There is also a valid count that there is 5 waves here already inside of the 5th wave, and that the top could be in, the local top could be in. But there is a chance for another high here. And all depending on how we break out here, I will know when I will be selling half of my Bitcoin holdings, guys, depending on how we break up here, just to buy cheaper in the next coming months, okay? I will always buy Bitcoin on the dips. But this would be a zone where, you will know on stream, guys, if you're going to be a legit subscriber and going to follow through the Bitcoin technical analysis, you will understand basically why I'm getting out, why I'm selling, some significant amounts of my holdings to buy cheaper maybe in the next coming months or year, based on how we break out from all-time high, okay? Breaking out from all-time high will give us a lot of information based on the rejection, based on the waves that we form. So anyway, for the moment, higher time frame, bit of boring, guys, price action, but just for all of those people that want a little bit of basic analysis, elite wave theory, we have possibly formed 5 waves already in the cycle of 2 years. Could we get a 1-year bear market already? Well, we are at a crucial zone. We are at a crucial zone that I am leaning on the bullish side. I am leaning that this could be the low. This could be the low of this range. We could form a local, another lower low, but I'm leaning that, it is very possible. And we can go through that on the lower time frames, right? Remember, guys, to absolutely destroy the like button if you do enjoy the content, okay? Let's see how many likes we do have right now. We do have over 300 likes. Guys, this is just going through the sentiment, the waves, the analysis, and understanding a little bit, the bullish case and the bearish case. I did sell 10% of my Bitcoin holdings in between $90K and $100,000 just to stay in the safe side, right? I will buy at 70K if we go down there. I will start thinking of buying at 70, 60, 50, right? if we do get down there, that would be actually a pretty good opportunity area. I do have some cash on the sidelines, and it would be nice to buy cheap Bitcoin again, cheaper Bitcoin, before we go to higher levels, right? Not sure if that's going to happen. And all of this is just understanding basic waves, basic market sentiment. Have one of the most powerful crypto events, Bitcoin events, ETF, forming that third wave. And exactly where we formed a local double top, we have the inauguration of the first US crypto president. Sell the news, they say. Well, apparently, yes, right? Apparently, yes. Sell the news. The inauguration of the first crypto president in the US was the local top. Local top, right? Just a few weeks ago. Sell the news. So now we're going to focus right away, guys, on the lower time frames and try and come and build up a nice, beautiful strategy for our trading setups, okay? That's what we do best here. We look for trading scenarios. Is there a good swing trade? How am I managing my risk? Is there a good local day trade scalping opportunity? And of course, if you are interested in that, you have one of the best exchanges out there for the moment for me, because you just need an email and a password. Of course, if you want to start claiming those free bonuses, such as the $10 to $100 bonus, you need to link your phone number to your email. You can win $20, $100, $50 for free just by linking your phone number, guys, with your email when you sign up to Weeks, okay? In the next 24 to 48 hours, you'll be getting an email for that verification, and you'll be getting this to your futures account, so you can use for trading, guys. Anything that you make out of that bonus, you can withdraw. For all of the big players, $30,000 deposit bonus. The more you trade and deposit, you're going to get thousands of dollars airdropped for the next coming weeks and months, up to $30,000 as a cap, okay? Now it's 25% fee discount. It used to be 50, it's 25% fee discount. So these bonuses do change, guys. So take advantage as we do get these bonuses, because they do go, all right, in the future. You got that second link down below, guys. For Weeks, anybody that doesn't want the bonus, just wants to sign up with an email and a password, nothing else. Weeks works really well, okay? I trade Bitcoin there for the last few months, and it works very well. Check out the second link, guys. Sign up to Weeks right away, just with an email and a password if you wish. Let's go through the local scenarios. Now, yes, we need to focus, put our energy. Where do we have the opportunities? What are we looking for here? Because on every stream, we talk about maybe we could do this, maybe we could do that. Well, why are you saying maybe this, maybe that? All right, you don't know what's going to happen. I know if we do certain movements, there could be opportunity zones. Okay? If we do take a look at the 5-minute time frame, and we focused on what happened yesterday. Yesterday on the stream, we were trading here. So yes, I was saying maybe we can form a 5-wave up, a 3-wave down, maybe another 5-wave up. Maybe we form an ABC move here. We start hitting some important fib levels to form our 4th wave. Okay? 382 Fibonacci from this pivot high at $97,000 from the weekend, last weekend. 382, 50%. You know, these are the 2 levels that we need to pay attention if we were to get that bounce in a 3-wave structure. We did not get that. So eventually, you know, this would be a shorting zone that I would be interested in, depending on the waves, how we get up there. The other scenario, which is the one that has played out, was looking for an ABC flat. Movement up, claim the lows, come back up to the highs of the range. That was the other scenario that could happen, which was explained on yesterday's stream. Come back down below $87,000 and get the bounce back up to $89,000. Giving you the chance to get into a double bottom, which was not easy. It got a little bit choppy. Regardless, this is what happened. So I'm going to give you 2-3 scenarios on what could happen. And depending if that movement happens, there will be certain levels that we can get into trade. If I don't know if we're going to form a three-wave structure to the upside to hit the 382 50% Fibonacci from the wave 3 start to the end, I don't know if that's going to happen. I know if it does happen on a certain move and certain waves, there could be a good shorting opportunity to get back down to the lows. This did not happen. Of course, I don't have a crystal ball. The other option here was coming down to sweep up the lows of yesterday below $87,000 and get that double bottom, which it did. We did get the bounce throughout the last few hours between today and this morning, right? So it's like you kind of can map the situation of what could happen based on certain movements, right? Yesterday, I told you it's highly unlikely that the price is going to break down and go to $70,000 from this point after this big drop that we had. Unlikely that we're going to continue dropping here, guys. We're going to stop at some point, right? And the different stops were those ones. Form a zigzag or form a flat. How come? How did you know that the price could stop here? And how did you know we were either going to form a zigzag or a flat? It all had to do with the highs of the weekend and the movement down here, as all of this looks very one wavy. There's no big major corrections. There's no big major stop. So you consider this the third wave. You consider this all one wave, and there needs to be some kind of stop here. And we are basically at the lows of the range. So what better place to form a stop, right? When you at the lows of a big multi-monthly range. You know, bulls need to defend this zone. So, you know, what better zone to stop than this one? So I'm not sure if anybody got into day trade scalp or just building up a swing long position based on, you know, the analysis. We are very much aware that what was mentioned yesterday, the lows could still be tested, right? It would be nice for this ABC flat. This turned out a little bit, you know, if this were to be an ABC flat, right? It would have been nice, or it might be nice if we do actually get back above the A wave. You know, for this to get into a short position is very, very complex, right? It's like a front run. You know, if this were to be an ABC flat, you know, it's a stop loss situation here. If I enter a trade here, should I put stop loss here? Or I'm just getting in a small position and stop loss is a bit further away. And depending on what happens, I will add to the position. It depends on your strategy. But this is a very difficult short, unless you're in a short from higher like myself. And you can add to the position, right? And you don't mind, you know, it really depends, right? On your strategy. You know, preferably as a day trading perspective, you want that C wave to claim your high of the A wave, right? That's the ideal scenario. Swing failure pattern, enter, stop loss. You know, you get the movement down. That's the ideal day trade, so you can manage risk properly. We did not take out the highs, okay? So we kind of front run the highs of the A wave. If this were to be the bearish case, right, we're going to roll down from here. But what was interesting yesterday was the long trading setup, right? Yesterday was the long trading setup on the double bottom, which was not easy, I have to say. It was not a clear swing failure pattern. It was very choppy. But at the end of the day, it's what happened, right? It's what happened. We did get the test of the lows and recovery back to $89,000. You did not quite test the highs here, but basically very much in that range, right? Based on one of the scenarios that was possible. So if we talk about this scenario, you can see on the chart that I do not know if the price is going to move down from here or move up, right? In a zigzag. But if we move down from here, the lows below $87,000 could give you a day trade long position back up to $89,000. So the long trade is after the next move that I don't know is going to happen, right? So if we do this, we could do that. If we do that, we could do this. It's all coming with what could happen next after the move that we are trying to predict, right? So that's how you build up a strategy. That's how you build up what could happen next, right? Where's your trading opportunity? So let's go right away through the different scenarios, okay? This was just a little bit of a recap of what was mentioned yesterday, but not much has changed. We got that kind of flat structure. Is that flat finished? So you are telling me that this was the high and that we're going to roll down? Absolutely not. We're having some very disturbing price action here. And this is what we need to analyze. It's very disturbing price action because we're just ranging here. And now the question is, are we going to come up here to the highs and then form the swing failure pattern, testing this high or testing this high, and then roll down? Or is the low in? Is the low in here? I mean, it could also be an option, right? We suddenly fly through here. You know what is the epic trade that I would be looking for? This is why I'm already in a small swing long position. This is going to be many weeks of a trade if I do not get stopped out. Because the low could be in. I mean, the low could be in. It wouldn't technically look beautiful, all right? It wouldn't look beautiful, so I'm very much aware that the low could be in, but I'm very much aware that it's highly likely that the low is tested again. And this would be the most epic zone to consider a massive swing long position. And the price needs to do exactly this that I'm going to talk about right away, okay? For anybody swing trading, right, or anybody ready to take a look at the charts in the next 1 to 2 days to sniper that movement, we need to really understand, right, what could happen. So we got this scenario. We are taking a look at the highs of this multi-week range that we formed, right? This is a big multi-week range that we formed throughout February, right? And this was the high before the major collapse, right? The Friday drop based on the Bybit hack, which they solved everything, guys. They're working just as normal right now, okay? That's old news. People really panicked with Bybit. Oh my goodness, FTX 2.0. Bybit is transparent. They do have billions of dollars in their treasury and they could support that hack, no problem. They have a good diversification. You know, I was very much confident that Bybit was not going to go, okay? Bybit is very much solvent, okay? And they have proof of treasury, right? Proof of reserves. I know that 1.5 billion was not going to be much of a pain. They could handle it and they're going to be just fine here for the next coming months and years. So Bybit is doing just as good. But anyway, the main reason we point out Bybit here is because of the collapse that we had as well. You know, that the news was giving that big drop down based on, we already knew with the technical analysis that this was a rejection resistance zone, right? I managed to short this level on the rejection. As we were above, I couldn't short it, right? This was explained a few days ago. Did get into that day trade short on the rejection, right? This was the start of this drop down. For the moment, we've got 3 waves down. That's what I can see here. For the moment, we got the big movement down, nice bounce throughout the weekend, and then we're building up the 3rd wave. This third wave for me is completed, right? The moment you stop and you bounce, right? I know that the 3rd wave is finished here, and even the most bullish case scenario, which I am not leaning on, okay, is that the 5th wave is even finished here, because there is a possible dodgy count that this could have been your 4th wave, right? It's not the most probable scenario based on the timing. The timing of this 4th wave is extremely shallow, right? Your wave 2 is much longer. Usually wave 4s are longer in time, or at least very similar. The main reason you can count this a wave 4, one of the reasons as well, is after this wave 4, you move down like this. 1, 2, 3, 4, 5. Now there is a problem with this movement. Would be an expanding move, but your third wave is small. Your third wave is very small. So I'm not leaning on this side based on this expanding move as well, because your third wave is extremely small, as you can see. So, I mean, this would be extremely rare that you formed a wave 1, your wave 2, your wave 3, your wave 4 here. This is the only count possible for your wave 4. And this has been your wave 5 and an expanding move down. This is highly unlikely. Your wave 3 is very small. Your wave 4 is very shallow in time. It's just looking for something that is not really there. But if the price were to recover, I would have to come to the conclusion that this was the scenario here. That's only if the price recovered. I would have to say, well, this is what happened, right? The low was in already, which I am not leaning on, okay? I'm not leaning that this is the high probability. This is very, very low probability that the low is in here, and this has been the movement. Based on timing, wave 4 is very small in time. Your wave 5 is an expanding move, very rare. Your wave 3 is the smallest here. Not possible. So we don't lean on this side because it doesn't fit, right? It doesn't fit nicely. So we just throw this in the trash. This goes to the trash. We're not considering this scenario unless we start seeing big bullish momentum. When would I consider that scenario here? When would I consider that this has been the scenario? Right? When would I consider? When the price hits the golden pocket from this pivot high from the weekend at $97,000 to the pivot low of yesterday. The moment the price hits golden pocket above $93,000, if that were to be the case, then I would consider that the low is in here, guys. So we'd need a big sign of strength. The correction here would be very interesting to look for long positions. But that is not the case, of course. That is just, you know, having some illusion, right? But it's all about hitting certain levels to understand, okay, now we're flipping bullish. So this is highly unlikely that we do get up to the golden pocket between today and tomorrow at $93,000 to invalidate the fourth wave and that the low is in. This would be a confirmation to be more confidence that the low is in, okay? That would only change the analysis for the next coming days. And I will be coming up here saying, guys, I'm bullish right now. I think that the low is in. Well, let's look at the corrective move, blah, 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 right? And just come up with the next different setups. That would be a confirmation that the impulse has finished. So any corrections here will be very interesting to look for long positions. And we'll go in detail through that once that happens, which obviously has not happened. It's just a confirmation level to be confident that the low could be in here once this level is hit. But that is not a high probability movement that we're going to see anytime soon, in my opinion, right? Leaning on the side that the lows could be tested. So this is the scenario that we're very likely looking at now. You have your wave 1, you have your wave 2, you have your wave 3, massive rollover. And yes, we stopped throughout yesterday and today here. The timing is good. The timing is similar to your wave 2. That's what we're looking for here. Legends, that's what we're looking for. We had a possible flat, running flat in this case, something that we mentioned yesterday. Could we get that running flat to form your fourth wave and then move down in a fifth wave? So far, it is a running flat if we do get down to the lows. So yeah, looks like that we could be rolling over based on the fourth wave. Maybe it has finished here. Maybe we do form a larger fourth wave. This would still be very much valid. This would still be very much valid. Fourth wave can be much longer, a couple of days. But it would be just about right, okay? Maybe if we do end up here. The timing is still relatively shallow for this wave 4, I have to say. If we take into consideration Fibonacci time, I mean, if you do count this entire structure as you're running flat, then you are crossing the 382, almost crossing 382 here. You could consider that this could have been your fourth wave. Just about, just about. Let's talk about the shorting opportunities and let's talk about the longing opportunities based on the analysis here, guys, okay? Very difficult right now, of course, to get into the short on this choppiness, I have to say. A little bit of a front run from the highs. It would be nice that we actually cross the 382 as we do get the highs here from the wave 3. The best levels to hit, without a doubt. I mean, we might form a higher low here and we might get one more push up and then the price corrects down. And this is what I would be ready for the next day trade. This would be a day trade setup to come down to the lows. If we roll down to the lows, I'm ready for a long. If we get back to the highs, I'm ready for a short. Best zones that I'm looking at here would be these two pivots. Even better if we do hit the 382 from the pivot high here to the pivot low, which is a common target zone for your wave 4. And that is in confluence with this last lower high. You got a big drop here. Big drop, first dead cat bounce, movement down, dead cat bounce down, okay? This would be ideal. The $90,000 level would be ideal to be hit where the 382 is, and we got that juicy lower high for a swing failure pattern. And this would be great for this kind of ABC flat scenario, right? Now this C wave is getting a little bit long in time, which is not really helping. Regardless, the levels are the levels. The confluence and the opportunity is the level, okay? And eventually that level, if we do reject from it, is the 382. I wouldn't be too sure if we are going to break through and hit the 50%. 91,500. So your best closest option to get into a rollover to the lows is really that 382 Fibonacci. That is the best option where you have the first lower highs after this major collapse with high volume, the highest volume drop, if I'm not mistaken. Yeah, there we go. The highest volume drop that we have right over here in the first dead cat bounce. Boop, boop, this one right there. That is the best liquidity grab level and swing failure pattern level, which is in confluence with the 382, which would be beautiful for that, you know, symmetrical wave 4 here in a 1, 2, 3, 4, 5. I mean, that would be in a perfect world, right? That would be the perfect short entry where you can manage risk. Did we front run the level? We're going to roll over from here down to the lows already. It is possible, guys. You know, trading is never perfect. We want to make it perfect, but it never is. So sometimes you need to be a little bit more aggressive, understand the CVD locally, right? Depending if you're scalping or not, to look for other alternative entries. But this would be the best option. I mean, it might even form a higher low when we consider the timing of the wave 3 and understanding that wave 4s are usually a bit longer than your wave 2s. It would make sense to form a higher low here, and you might form a zigzag where you do have a a movement up here, you're forming a correction, and then you form a zigzag up here, and you do form a bit of an ABC, and then you roll down to the lows. So we cannot rule that, you know, that we cannot hit this high and we're already going to hit the lows. It might, based on the timing, there is time still for this wave 4 to form. So we can't rush in, right? Especially when we're dropping down here. You know, this would not be a level that I would short or I would long. Understanding the zigzag and understanding that we could test the lows. So it's not really good based on stop losses, you know, a level that I would trade here. It's either the highs or either the lows, right? So we talked about that shorting opportunity. And I'm not sure if anybody got into that day trade long position that we mentioned yesterday based on a possible scenario double bottom here. I mean, it was a bounce of $2,000 plus. It was an option. So we are going to talk about two options now. Just the closest options. And you only trade it based on the reaction. Okay? There's going to be a short, there's going to be a long. You take it with a grain of salt. I'm going to tell you how you can get into this trade with very good risk management. And if it gets stopped out, you have a very good small little stop loss. And we move to the next one tomorrow, tonight, doesn't matter. We move to the next trading setup, right? What you do not need to do is add to position. I'm going to long, I'm going to short, I'm going to add to the short. We're going lower, right? You just need to, you know, as a day trader, we look at specific setups. If that one works out, great. We lock in the profits. If it doesn't work out, we get stopped out. We move to the next one. So if you would have considered this long opportunity on the double bottom, you had to take profit at this $89,000 range, especially when you're ranging, right? You're ranging sideways. You know, if you're taking it as a day trade, you need to take profit, right? It's from the lows to the highs. It's a day trade setup. You can build up a swing long position, 1-2% of your capital. Be ready for 85K. That could happen. Depending on how you handling the situation, if you are a swing trader or a day trader, you're going to have a swing trade open and you can look for day trades. This was a day trade setup that we mentioned yesterday because we're looking for a flat basically, right? So you're long here and you get out here. You can have another swing long, low capital, lower leverage. You're happy with 85K being hit. You understand that that could happen, such as myself, that I understand that. I'm going to handle the swing trade at another, you know, at another pace, right? This was only a day trade. So we're going to talk about the day trading scenarios, okay? Right away again. And I will only get into the next day trade setup at these levels if we move like I want the price to move. And it's either going to be a short or it's going to be a long. Yesterday, we had a long option based on the double bottom below $87,000, right? Test the lows, come back up to 89K. That's what happened this morning. It's a day trade. We ain't looking at a massive move of $10,000. It's a $1,000-$2,000 move. You get in, you get out. You get a bit of higher leverage. You're risking 1-2%, right? It's an aggressive move. On the lower time frame, it's a day trade. You got in last night, you get out today. So we're going to give some scenarios here on stream based on Bitcoin, okay? One is relatively simple. It's the short trade that I explained. What if the price, based on the timing, I understand we could test the lows and we'll go through the bullish case scenario right away, guys, okay? But I need to go through the bearish one, which maybe has been missed, and we look for the long trade. Okay, day trade I'm talking about. Okay, you could be in a swing trade already. We're talking about day trading scenarios that could turn into a swing trade. Of course, we talk about the short, we talk about the long. If you are interested, as mentioned, Bybit had a massive hack. They handled the situation perfectly. You know, Bybit is one of my favorites. You can trade on Bybit and get a great bonus as well, guys. All right. For the moment, I am trading a bit more on weeks because I had to test out weeks for the last several months and it works absolutely beautiful. But Bybit, they've been active for over 7 years now, since 2018, and they've handled every situation very nicely, guys. You do get a great bonus on Bybit as well, guys. Of course, Bybit requires more information. If you do want to trade, okay, just with an email and a password, you have the option with weeks, okay? You also get the beautiful perks here, all right? 25% fee discount. You get $30,000 deposit bonus. And if you link your email and your phone number, you can get in between $10 or $100. So you might get $20, you might get $100 in the next 24 to 48 hours. And you can use this for trading and you can withdraw the profits that you make from that sign up bonus, guys. They're giving this to you just by signing up and linking your phone number, which is absolutely awesome if you tell me, right? You know, take advantage of that free money that they give you. You got the second link, guys. Okay, Bybit number 1, weeks number 2, if you want to sign up just with an email and a password, right? And start trading there. So let's go right away with the setups that I'm looking at here intraday that I would be interested in getting into. If the price does form a higher low, we might be forming some bullish CVD divergence. There might be getting some selling pressure here. And we could be forming some local bullish CVD divergence that might get the price getting a leg up here, forming a higher low, and we get another wave up. I don't know if this is going to happen. It might. If it does happen, it's coming to my interest area to take a short, right? I want the price to do this in a 5-wave move to form a zigzag if this was not a flat. The only flat opportunity for a short was sweeping up the highs. We did not sweep up the highs. So we only had the long option, which was sweeping up the lows to come up to the highs and take profit here. The short was not possible. Why wasn't it possible? Because I wanted these highs to be swept. That did not happen. So the only option was the long to the highs, really. And you have to get out, right? As you're getting choppy, just get out, take profits. A lot of people might have their take profit limits here. But when you're ranging, you need to understand, okay, you know, we need to get out here. We need to get out just in case, you know, it's a lower high, lower high, lower high, very strong downtrend. You need to get out here if you did long from this area as a day trade. So if we do form that movement, right, we got some bullish CVD divergence on the formation. You know, there's a lot of people interested in shorting this rollover, right? They are targeting $85,000. They are targeting the lows, right? 86, 85. They're targeting the lows basically. We got lower lows ever so slightly, not massive, but we do have them on Bybit as well. There is some lower lows on the CVD. Okay. Higher lows on price action. Lower lows on CVD. Right? This would not be a long position that I would enter. Okay? It's just I understand that the price could bounce based on the bullish CVD divergence, right? So there's no FOMOing into a short here based on the rollover, because I understand that the price could bounce based on bullish CVDs. There's a lot of shorts entering the market here. They could get absorbed and you get another movement up to claim the highs. This is no zone for a short or a long. Why is it no long? Because you are downtrending and this could roll over and this could be an ABC running flat and you could test the lows. There's no long to be taken because you're downtrending in the middle of the lows of yesterday and the highs of today. You're in the middle. You don't know if you're going to bounce here or you're going to test the lows. So there's no short or long to be taken. I realize there's, for me, it's a 50-50 here. You either roll down, test the lows, or you come up here. So as I understand that inside of this movement, this or this could happen. Once we get one of those movements, this is where I am interested. This is where I'm interested once we claim those lows of yesterday or claim the highs of today. Depending on that breakout is where I'm going to be taking my trading decision. That's where I'm going to decide if I want to enter a short. That's where I'm going to decide if I'm going to enter a long. In the middle of the lows of yesterday and the highs of today, no trade. No trade. Why? We are downtrending. We could roll down. We are forming bullish CVD divergence. I am aware of a zigzag here. Looking at the waves and understanding the structure. This could be a 1, 2, 3, 4. The fourth wave could extend a little bit. So I don't like it. I'm aware of both scenarios. This is why if we were to form a zigzag, sweeping up the lower highs from Tuesday after this major drop is in confluence with the 382. Now, how we can trade that, there's only one way here to trade this. You get above it, 382, you get below it. That is the moment of trading decision. Entry, stop loss above the high. You're looking for the lows to be taken, considering the 1, 2, 3, 4, 5, right? Claim the lows. Zigzag move, 382 Fibonacci, common target zone for your fourth wave. I like it. This is where I would decide, based on the rejection of the 382, if I want to enter that short position. If the price, we got bullish CVDs locally here from yesterday's lows, so maybe we do form the zigzag. I don't know. If we do form it, this is going to be my decision zone, $90,000 range, 90,200, give or take. I need the 382 to be hit and get the rejection. That is when I'm going to step in with a stop loss above the high. It's a trading setup. This is the moment that the price could collapse down to sweep up the lows of yesterday. Now, that is a trading setup. It's a trading strategy based on the waves, understanding how we move. I do not know if we are going to get up there, just like I did not know yesterday if the price was going to zigzag from here or claim the lows one more time and then get the bounce to form a flat, a running flat, an expanding flat, I don't know. Basically getting to the highs of the A wave. I didn't know if we were going to roll down, but if we do roll down, I'm interested in the long position here on the movement, right? If we get above and chop above the lows, I understand that this movement up is highly likely. This movement here is highly probable, right? So that is basically what happened yesterday once we claimed the lows. We claimed the lows when we were trading here on the live stream, and we got this movement up. This is the high probability movement that we were looking for based on the reaction of the lows. A lot of choppiness, not easy, right? But stop loss beneath the low, and you're looking for the highs. It's a 3 to 1 risk reward max, right? But that is the move that we know that has higher probability. So I don't know if the price is going to come down to the lows or come to the highs. But if we do come up to the highs, I know there could be high probability if we do reject from these lower highs that we formed throughout Tuesday after the drop, hitting the 382, which is the common bounce zone, even 50%. But if we get above 382 very explosively, then we just need to wait for the reaction at 50%. But the 382 is the first one. If we reject from 382, I got a short entry with good risk management. I can put my stop loss above the rejection. I can enter below the 382, and I'm targeting the lows. This would be a nice 4-to-1, 5-to-1 risk reward, depending on your entry. And that is coming to the conclusion that, you know, we should be forming one more low at least, right? Based on the 1, 2, 3, 4, 5. You need the rejection from the 382 so you can have your stop loss above the fake out pump. You're targeting the low. It's a realistic projection. We are still downtrending. So if we were to get up there, this is the high probability move that I do see, okay? And it's the only one that I would take action for my next day trade. Now, we have the price rolling down. Hey, we're not going to go up there. The price is dumping, blah, 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 blah. You know, we got the impatient, right? The impatient, which is always very, very classic, right? We do have the impatient. Hey, we're rolling down. That scenario is not going to happen. Well, what if we do form a higher low here based on bullish CVD divergence? There's a lot of shorts entering the market right now. We can see it throughout, you know, Bybit, rest of exchanges. You know, there are lower lows on the CVD. People are shorting, providing liquidity pocket right above 89K. So it might just squeeze up before we go down. So if we get that squeeze up, it would be in confluence with the analysis that I just provided. You're forming your wave 4 still. That's your wave 2. And we're getting one more leg down. The wave 3s are the ones that have the highest amount of volume. So we would come to the conclusion that all of this has been your wave 3, right? So we just need to give a chance locally for that bounce. That bounce might happen. I don't know if it's going to happen. This could have been the ABC flat, the scenario that we mentioned yesterday, right? It was a running flat, not the most beautiful, but maybe this was the 4th wave. Still a little shallow in timing compared to your wave 2. Okay. And also the 3rd wave length, still a little bit shallow, but you would come to the conclusion that this was it, right? If we take out the low, I have to say, this could have been it. This could have been the flat, very, very likely. So we talked about the shorts, right? What if we don't get the bounce? We come down to the lows. This was it. We break down. We have a pretty nasty move below $86,000. What the heck is going on? You talked about a short. We put it in the rubbish because it did not happen, right? A short day trade. We claim the lows. We have an attempt in breaking down. This is going to test your patience, guys. There is 2 scenarios that could happen. One scenario, we break down and none of the analysis that I've been talking about is legit. We break down and I would have to consider that we are forming an expanding 5th wave, because we do have expanding 5th waves. It is possible that, you know, a 5th wave can be larger than your 3rd wave. It is possible. So it's gonna be very, very difficult. At the same time, it's going to be, you know, very, very interesting. Most commonly, your 3rd wave is the largest, and your 5th wave is similar in length than your 1st wave. That is the most common, right, scenarios when you're looking at an impulse. Most commonly, you do see this kind of structure. The 5th wave is similar, not the same, but sometimes it is the same to the dollar, but not always. Similar, right? If we consider the similarities of a wave 1 and a wave 5, could it be that we are going to form a similar length from the drop of last Friday, right? Is it possible? Is it possible that the length is going to be similar from this wave? Possibly, yeah. If it's here, or if it's going to be slightly higher, we get the 382. That's kind of almost with a double bottom, right? This is not an exact science. It's just looking at the projection of the fifth wave can be very similar in length, maybe a little bit more, maybe a little bit less. Of course, we do have Fibonacci targets for the wave 5, and we can talk about that. But what is most interesting is the highest confluence level that we do have beneath the low of yesterday. So let's talk about the first one, right? Step by step. Let's just go straight to the point on what is the best level that was mentioned yesterday. But anybody that is new, just get ready, guys. It might be the opportunity zone. And make sure to understand that if we do break down, there is no long to be taken at this level that I'm going to explain. If you smash through with big volume and big aggressive candlesticks below $85,000, there is no long to be taken. So how the heck are you going to enter this long? And how are you going to manage risk? Can you please explain what is going to be your trading plan? Because that's what we do here. We analyze the levels, the scenarios, the waves, the confluence, and how can we get into that trade safely? And safely, when I say safely, it means protecting your losses. The most important thing in trading that 90% of the people do not apply, which is the complete secret, guys. It's the secret. The risk management is the secret. It's not the strategy. It's not the guru. It's not the favorite YouTuber or favorite guy, a technical analyst or trader. It is your risk management that is going to make you win in the long term. It's yourself. It's your risk management. So I'm going to tell you the plan here, which is very simple to understand. And you can apply it your way, but I will teach you how I would apply it if we do hit that level. And that level, you know, guys, anybody that is a legit follower that's been following the last few days, is the $95,200. Why is this level so important? It is really the ultimate low of the range. This is really the ultimate low of the range, because when you got that pump throughout November, it was very, very powerful, guys. We went from $70,000 in just a few days all the way up to $85,000, $90,000, right? We pumped $20,000 in a matter of, 3-4 days. Very, very fast. Now, this is great, but there's a problem behind this. If you lose $85,000 successfully, you will very likely get a very strong drop collapse, guys. Maybe going to $75,000, even lower. So it is crucial, this zone. And I do think that we could be testing it either today or tomorrow. I have that feeling that it's going to be tested, not only because of feeling, also because of analysis, which will be explained right away. So this is the action point, and I would consider this more as we do have a lot of, this big movement up, inefficiency, right? This is inefficiency. This is a big move up. No support, no confluence, no nothing there, no dailies. I mean, we might have a daily or a weekly down there. Let me just double check here. Yeah, there's literally, there is some naked point of controls at 81, but that's already breaking down. There's a daily level and naked point of control at the low $80,000 range, which I wouldn't expect the price to hold very well. Regardless, it would still be a drop of an extra $3,000-$4,000. Really wouldn't consider taking a long here, to be honest, until we see a sign of strength, a recovery right above the levels as a swing trade. So the first initial level of interest is that $85,200. The first higher low after the big major pump up in November. This is a crucial level, and it's in confluence as well, counting the waves and this area that we've had on the drop of the last few days, right? So we're going to leave this level. I do have it here already as an SFP level. We are moving down. We are dropping ever so slightly now, as we do see, well, we do have New York open in a while from now, not just quite yet. I have to say that if we do come down to the lows, this has been your wave 4, very, very likely. Very, very likely. This was your ABC flat, something that we talked about yesterday, to form your wave 4. Now, if you were to claim the lows of yesterday, I would consider that this is your wave 4 end and that we could be finishing the final wave down. Now, this is going to be very interesting because the best level where the price needs to recover from, which is a higher time frame swing failure pattern, is the 85,200. So you could hit 84,500 or even $84,000. That would be quite messy. And then recover above this level throughout the next coming hours. If you form that kind of price action after testing the low, recovering from that higher low that we do have from November, and we know and we understand that the fifth wave many times is similar in length than your first wave. Similar, not the same, but similar in length. That's kind of in confluence with our interest zone. Okay, so it would make sense for that nice little push down below $85,000, maybe hitting even $84,000 range, and then get the swing failure pattern and an ultimate recovery in the next coming days. Now, let's take a look at fib targets, right, regarding this scenario. Fibonacci targets. If this were to be the high, your wave 5, considering the length of your wave 4, just in case, guys, we do not form a zigzag here, we're just looking at target zones. Your wave 5 compared to your wave 4 is usually larger eventually. Wave 5s are usually a little bit larger than your wave 4. And that is giving you a target zone at the 1236 and the 1.618. This Fibonacci extension is your common target zone for your wave 5. Considering that this was your wave 4. That is where we do have the SFP level. $84,000 is the 1.618, okay? Which is kind of your, extensive target zone from this, looking at this measurement. And the 1236 is just at the SFP level, right? That higher low from November. 85,200, that is exactly the 1236 where we have that low right there. So this is going to be a possible box area where the price bounces. Will we swing failure pattern at 84,800, 85,100, 84,000, and then we swing failure pattern? We don't know which one is going to be the low. However, what we do know, okay, I'm not here to catch the low here. I'm here to catch the recovery. I want to be in this move here. So what I need the price doing is getting back above that swing failure pattern from the higher low of November, right? So let's just say SFP November higher low. This pivot right there. This is a swing trade. This is a swing trade. You know, stop loss down here beneath the lows. You are looking for an ultimate recovery in the next coming weeks, right? It's going to be very choppy. It's going to be very whatever the price does. But it should be the low. It should be the low considering the higher time frame analysis, okay? So all of this map situation on the lower time frame where we are counting a 5-wave move down, right? The whole idea of this 5-wave move to the downside, the whole idea of this situation, whether this is here or it's going to be here, right? We're mapping the situation. The whole idea of this is that we have formed this structure right over here in a W, zigzag, X, and another zigzag ABC move here. And of course, inside of this yellow count, A, B, and C, right now at this stage, we are counting the C wave in yellow. And in a C wave, you want 5 waves. And right now, we are in between the 4th wave and the 5th wave. Is the 4th wave in? Is it not? Are we forming a zigzag first? Are we coming down, then forming the 5th wave? Is the 5th wave on the formation? I don't know. I don't know. What I do know is where I'm going to enter a trade. That is what I do know. Based on the zigzag, if we get that zigzag, I'm interested in these rejection white horizontal lines. Why? Because it's the 382 Fibonacci from your wave 3, common for a wave 4, 382 rejection or 50% rejection, test the lows, stop loss above the high of the rejection. I am speculating on that wave. If we come down and test the lows, I'm looking for the end of the 5th wave, considering that the wave 4 is already in. Very possible. That is basically it, guys. There's the 2 trading ideas for a short or for a long day trade setups. In a nutshell, after looking at all of this scenario, of course, this zigzag move is from a much larger, this corrective structure from the previous all-time high in December, where you have a zigzag here, you have a zigzag here, and you have the other zigzag right over here, double zigzag. This is why this could be the end stages, which is in confluence. We're looking at the last 4th, 5th wave. If we are lucky and we don't break down, guys, and we, if we were to break down, like I explained at the beginning of the stream, we have to consider that we built up 1, 2, 1, 2, 1, 2, and we are building the 3rd wave now, and it's just going to get very, 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 very nasty. Okay. This has been a multiple 1, 2, 3 1, 2s, and you're in the 3rd wave right now that could get messy in the next 1 to 2 days. This is why if we don't break down today, tomorrow, and we still continue dancing around in this zone, it's going to give you high probability that what we are looking at here, the more time we are ranging here slightly below $90,000, will increase the probability that we are looking at the reaccumulation schematic. The bears need to break down, guys, in the next 2 days, before the weekend preferably. If we don't break down, we highly likely this is going to confirm, this is going to increase the probability that we are in reaccumulation. Okay, so the bears The time is against them. Time is against the bears right now if they're not going to manage to break down below $85,000 successfully. They have a couple of days. I'm going to give them till the weekend, till Friday. If we don't break down, then eventually we are looking at a reaccumulation. We're in the fourth wave scenario here on Elliott wave theory. And we have potentially the formation of a larger corrective structure. And we are looking for the ultimate recovery in the next coming weeks, guys. Very interesting zone for Bitcoin. And we are trying to spot the low here. We're trying to spot the low. We could be very, very close in forming the low. And if we were to recover, like I mentioned, also, the only fourth wave possibility that we have here, I wouldn't expect the low to be in here. I have to be honest. Based on the timing, it would be just right for another low here. It would be just right. And the only fourth wave that I could come up with is this one right over here that is just not, it's shallow in time, very shallow as well on the Fibonacci retracement, almost just ever so slightly hitting the 236 Fibonacci, ever so slightly hitting it from the highs to the lows, right? Very shallow on retracement, very shallow in timing, right? The more symmetrical you have a correction similar to your wave 2 in this case, the better. This is very shallow in time, very shallow in retracement, so I wouldn't lean on the side that this was the wave 4, but if we do recover from here and start hitting the golden pocket, then eventually I would have to say that the low is very likely in. Golden pocket, $93,000. If hit, the low could be in, and we'd have to come to the conclusion that, you know, the 5 waver has happened here already, which, I mean, it wouldn't make sense, guys. You know, this is not, I would just say this had to be the scenario if we do get to $93,000 plus, okay? So those are the next trading setups, guys, in a nutshell. In a nutshell, there's a long explanation zooming out, understanding, right, the analysis here. I hope you enjoyed. Make sure to destroy the like button. I'm not a genius. I don't have a crystal ball. I really put in the hours, right, behind the confluence, the wave counts, and the you know, the different scenarios and trading opportunities that there is, just to wait patiently, because you know what? One of those levels, either a short or a long, one of those levels is going to be hit between today and tomorrow. So I just wait for the price to come to me. I don't go and rush into the price, whatever the price is doing. I create a plan and I want the price to come to me. As a day trader, I have a short and a long setup. With good risk management, I know where I'm putting my stop loss. I know exactly when I'm going to enter, and I know where I'm targeting. I know exactly those 3 things to take a trade. And I have a short and I have a long. Intraday, meaning that the price will come to my levels at some point. And that's it, guys. It's just, that is it. And this is for my next trade setup, right? I've been trading throughout the last few days at certain different levels. You know, you had a day trade possibility yesterday, looking at the double bottom. We were trading at $89,000. Guys, if we get below $87,000 and we test the lows, we are likely not going to break down and form a double bottom and bounce back up to the highs that we created yesterday, which is $89,000. So you got a little day trade right there. We talk about a couple of scenarios. Depending if we go up or down, we got a short and we got a long. Yesterday, you had a long decision here at the lows of the drop that we had. And of course, if you are interested in getting into consistent day trading with good risk management, I've been testing out this exchange, guys. Weeks for me is great. I've been testing it. It is highly liquid. You got great bonuses, great deals for the people that sign up down below, okay? You got $30,000 deposit bonus for the big players, the ones that are going to trade and move volume. They'll be getting airdrops, guys, of thousands of dollars. And for all of those people that want free money, you do have the free money as well. Just by linking your phone number, you get in between $10 and $100. You might get $20, you might get $80 in the next 24 to 48 hours, airdropped to your futures exchange. And you can use that for trading, and you can keep the profits and withdraw the profits. This is going to be airdropped to your futures account, okay? Might be 10, it might be 100, it might be 50. All right, so check out, it is the second link down below, okay, guys, if you want to be eligible, okay, for those perks, only signing up with the second link down below. Not much more to say about Bitcoin here, guys. There's some nice intraday trading plans ready. There is the potential of the swing long position based on the reaccumulation schematic, which everything points out that it could be a possibility. Of course, we are aware. I do not want to believe this, but there is a valid count. This is not the probability that I'm leaning on, but there is already a 5-wave impulsive move since November of 2022 when we take a look at the daily chart, guys. There is a 5-wave move up throughout the last 2 years. So we need to be careful. Don't go all in. I've been in the crypto space for many years right now. I had to sell a little bit of my Bitcoin in between $90,000 and $100,000, guys, because I am a technical analyst. I do not pay attention to fundamentals. I don't care that the president of the United States is the first crypto pro president out there. We trade based on technical analysis and not on FOMO, good news, bad news, guys. It is all on the charts. Don't listen to the news. Stay defensive. We trade based on chart analysis. The chart tells us the story. The best opportunity zones is when we have bad, very bad news. FTX collapse. The C19 collapse. All bad news. The future's looking bad. The most bullish event for crypto this year was the first year. Yes, we are live. We're back. Something happened here. We got we're back, right? I think we are back. We are back, baby. Let me double check. Yes. Yeah, all right. I don't know what happened, guys. The charts and the software that I'm using got frozen. So I'm going to have to end up this. A lot of people really think that that I finished the stream here. It got frozen, okay? The analysis has been provided. Not much news to talk about. We don't have news today, guys, okay? The analysis on Bitcoin being most important. Bitcoin dominance is looking interesting. There are some altcoins that are getting a little bounce, okay? But Bitcoin dominance still ranging on this uptrend. We can talk about